Alright, so this will be a very quick video regarding how to identify momentum, and you can utilize this on both higher time frames and lower time frames. But of course, the higher the time frame, the more reliable it will be. So we're going to start off from the fact that when analyzing momentum, you always have to analyze previous days price action. Why? Because the previous day's market's price action is what actually determines the actual momentum in the market, the current momentum in the market. Because when we analyze the current day market price action, for example, we are looking at a fake momentum, let's call it. Why? Because the actual momentum that we are looking at in the current market is the actual momentum coming from the previous days. Therefore, every single big move that we can see in the current market for example, news releases or manipulations in the market or breaking news or whatever, most of the times they're just manipulations. There are no real market moves that there are actually defining a direction, and also they are going with the actual momentum in the market. And what I like to do I mean, not what I like to do, but what I do to identify. My laptop completely shut down while I was recording, so I took the time to create new candles just to make it clearer. So what I usually do is literally count the previous market price action candles and compare them with the current price action. And I mostly use this technique. Let's say this identification of momentum on the H4 time frame. Why? Because for me it is the most reliable time frame to look at when we want to identify momentum. And again, what I usually do is literally count the previous candles and compare them with the new ones. You can either utilize this tool right here to literally count candles, or even this other one, which is literally the vertical one, to identify also the amount of pips and how much the price has moved in a certain direction. But again, what I like to do is to literally count the candles from the previous high and the previous low created, and I compare them with the new high and the new low created. So basically, it is literally this. Let's assume that we are in a bearish market trend, like literally something like this. All right. And we are arriving into this area right here where I drew this candles right here, and we have 1, 2, 3, 4, and the with the fourth one creating the low. And with the next two candles here, we can see actually that these two candles have created a bigger move compared to the previous two ones, right? So someone may identify this as a, let's say, as a bullish momentum change in the market. Right. Why? Because the market has moved stronger in the opposite direction, as to compared to the one that it has been moving. Right. But again, if we look at the bigger picture, we see that the market has been going just down. Right. And looking at the bigger picture here is the most fundamental, the most crucial part. Why? Because most traders do not do it. And of course, if you lack the analysis of the higher time frames, of course, you lack the most crucial aspects. Why? Because again, the market and the price, they follow what has been going on in the last previous days, and what has been already established in the markets. because everything else is just a reaction to what has been going on. It's nothing coming from, unexpected things or whatever, because again, unexpected things that may happen, like breaking news or uh, news releases or whatever, they're just, of course, depending on the news, but they're just volatility. They're not a direction for the current market. Therefore, they will just either manipulate the market or follow the actual momentum that has been going on in the market. And in this case, this is again a classical example, something that usually happens. The market during the current day, where everybody or most trader would think that the market has switched to bullish, what happens is literally just the opposite, which is the continuation of the actual momentum in the market. And we see this huge downside movement, for example. And of course, this is just something as an example, but I can assure you that most people watching this video may know what I'm talking about. That this usually happens a lot of times. Also, another thing that may help you is to literally for example, if you're unsure about the current momentum in the market, you can literally just wait for these situations, like for these breakouts, for example, these huge breakouts, for example, that are just confirming the current momentum in the markets. Why? Because you have the confirmation of it, which is a huge step towards clarity. Why? Because you need clarity in order for you to be able to trade safely, let's say, when trading with momentum. This is all about it from my side. So I hope you will find this helpful. Let me know in the comments if you would like to know something else about it, or if something is not clear. Thank you for watching, and I'll see you in the next one.